Chalo, we are live on YouTube also now, people. Yes, we are live on YouTube.
Recording in progress.
Yes, people. Good evening to everyone. Welcome back with another session of taxation. Now, since we had off yesterday, let us quickly revise what we had done day before yesterday. If you remember, people, we were doing this chapter called as what? Residential status and what? Scope of total income, in which people we have completed the first half of the chapter, that is how to determine the residential status. Now, if you remember how to determine the residential status, we had learned for individual, we had learned for HUF, we had learned for partnership, from AOP, BOI, AJP and company. The most important from exam point of view was what? Individual. Was most important from what? Exam point of view. Then we had learned the balance also. If you broadly remember that there are three kinds of people. One is called as what? ROR. One more is called as what? RNOR. And the third category of person is called as what, people? Non-resident. How to determine a person as ROR, how to determine a person as RNOR, and how to determine a person as NR. All those things we had learnt. Now what we have to learn today in today's lecture is that if we are ROR, then on what all incomes we have to pay tax. If we are RNOR, then on what all incomes we have to pay tax. And if we are NR, then on what all incomes we have to pay tax. All this we are gonna learn in today's lecture. If you remember, a summary I had already given you in the first lecture itself. That is, when we were doing the chapter starting foundation, I told you that if you are a what of India, people? If you are a what? If you are a resident of India, then whether it is a Indian income or whether it is a what? Foreign income, you have to pay taxes on what? Both the incomes. But if you are a what, people? Non-resident, then in India you have to pay tax only on what? Indian income. You don't have to pay tax on what? Foreign income. Now in today's lecture we are gonna understand that what is Indian income, what is foreign income, what all taxes ROR has to pay, what all taxes RNOR has to pay, on what all incomes NR has to pay taxes. All those we are gonna learn. So let us start, people. Everyone, can you read what have I written here? Post determination. Post what, people? Determination of residential status of person, we need to determine the what, people? Scope of total income. That is, what incomes will be taxable for ROR, what incomes will be taxable for RNOR, and what incomes will be taxable for what? NR. Now let us see. Now before I start, I'll keep on writing one by one particulars. According to you, say me it will be taxable for all or it will be not taxable for all. Then we will see what is the law saying. Particulars. Sorry, people, if my voice is little bad today. I'm having some throat infection, so just adjust for one day. First, yes, okay, perfect, perfect. No, okay. Now I'll write income. Sorry, my bad. I'll not write only income. I will write any income, any income received, any income received in India. It does not matter whether it's accrued in India or it's not accrued in India. It does not matter. It can accrue in India also, it can accrue outside India also. As an account student people, I hope you know what is meaning by the word accrual. What do you mean by the word accrual, people? That incomes will be taxable when it is accrued. Whether it is received or not received does not matter. But as of now, I'm not talking about the word accrual. I'm talking about the word what? Received. Any income received in India. Now say me people, everyone in the chat box. Should it be taxable for everyone or only for few people? Say me in the chat box. I'm waiting for your answers, people. Taxable for all, everyone, all three, all. Yes, it is taxable for what? All. Whether you are ROR, whether you are RNOR, or whether you are what? NR. Any income received in India will be taxable for what? All. Everyone clear? So, next. Any income accrued or arised, any income accrued or arised in India, it can be received anywhere. It can be received in India also and it can be received outside India also. But what am I talking about? Any income accrued or arised in India, will it be taxable? Before me only saying, people have already answered. Very good. And the answer is what? All. So people, whether you receive the income in India or whether the income is accrued in India, it will be taxable for everyone. See, all these are or, huh? Or. Whether the income is received in India or the income is accrued in India, it will be taxable for what, people? It will be taxable for everyone. So for what do you mean by one example of accrued in India? Now people say me, I have a business in Bangalore, and whatever the business income I get from the business in Bangalore, is that income accrued in India? Can you say me yes or no? Is the income from business in Bangalore accrued in India? It is accrued in India. Like this, another example, any income from a property in India, or any income from sale of shares of Indian company, or any income or any dividend income from Indian company, or any salary from an Indian employer. So all these incomes are what, people? Income accrued in India. And what can be example of income received in India? Let us say my brother is doing job in UK. Where is my brother doing job, people? UK. So his UK boss is giving him salary. So first of all say me, where is the salary accrued of my brother? Can you say me, people? Where is the salary accrued of my brother? Everyone is saying what, people? The salary is accrued in what? UK. So the income is accrued outside India. But let us say the UK boss gives the salary in Indian bank account. The UK boss gives the salary in what? Indian bank account. So where is the income received, people? Where is the income received? The income is received in what? India. It is accrued outside India, but where is the income received? It is received in what? India. Since the income is received in India, even that UK salary will become taxable in India. So what my brother has to do, in order that income does not become taxable in India, what my brother has to do? That income has to accrue also outside India, as well as he also has to receive that income outside India. Now many people can ask, sir, this is so wrong, no sir? As a non-resident, many people give some money to their father in India, to their mother in India. See, there is a difference between the word received. There is difference between the word received versus there is difference between the word remittance. See, there are two things. One is called as received and one is called as remittance or remitted. See, remittance basically means only a second transfer. Let us say my brother staying in UK, doing job in UK. receiving salary in UK bank account. So income is accrued outside India and income is received also outside India. So receipt has already happened in UK bank account. Now every month people, my brother transfers 40,000 rupees to my mother's account. So is that 40,000 rupees which my mother is receiving every month from my brother, is that income of my mother? And the answer is no. That is merely a remittance received by my mother. Who had received the income? My brother had already received that income. My brother had already received that income. My mother is only getting a remittance of it. So basically receipt or received means the first credit and remittance means the further on. So what we have to see is where is the income received. We don't have to see what? Remittance. If the income is received in India, it will be taxable. If it is remitted to India, then no. I hope you are understanding the word received and the word what? Remittance. Another example of this can be, I was having a business in Afghanistan. People, many of the dry fruits in India comes from Afghanistan, if you don't know. If you know, in many of the household, we have something called as hing. Hing, you know, hing. I don't know what you say in other language, but there is something called as hing which we use in entire India's hing comes from Afghanistan only. So majority of the dry fruits in India also comes from where? Afghanistan. In India, majority of the dry fruits are not available. We have to what? Import it, and then processing happens in India and packaging happens in India and then we sell it in India. So let us say I have a business in Afghanistan. So can you say me where is the business income accruing? In the chat box, can you say? Where is the business income accruing? Yes. Can you say me in the chat box? I have a business in Afghanistan. Where is the business income accruing? Yes, people, I want answers. It's not a movie nonsense. Yes, everyone is saying that the income is accruing where? Afghanistan. Now, income is also received in Afghanistan bank account. Income is also received in what? Afghanistan bank account. So income is accrued also outside India and income is received also outside India. But at the end of the year, I remit the money to India. I remit the money to India. So that does not matter. What matters is where is the income received, or what matters where is the income accrued, not remittance. I hope I have made myself very clear the difference between the word received and the difference between the word what? Remittance. Let us say, we will take your example only. No, you people earn, majority of the people here will not be earning. Yes, some people might be earning also. But don't you think every month you get some pocket money from your parents? Now, is that pocket money income for you? No, that is the income of your parents. For you, it's merely a what? Remittance. I hope you are understanding. Yes. So, any income received in India or any income accrued or arised in India will be taxable for everyone. Whether you are ROR, whether you are RNOR, or whether you are a what? NR. It will be taxable for what? Everyone. Now, third thing and the fourth thing. Third and the fourth is similar to first and second. See here. Third. Deemed to be received in India. Deemed to be what, people? Received in India. Is it actually received in India? No. But government is what? Assuming that the income is what? Deeming received in what? See, whenever government cannot win any argument, no, what they will do? No, go deem. Now do whatever you want. But this point we will not learn today. We will learn when we do chapter called as salaries chapter. So as of now, we are keeping this point on hold. So when we do salaries chapter, that time we will learn. Sir, is remittance taxable? No. We will see that in today we are going to solve lots and lots of questions. Also, I am going to give you many questions as homework today. So after today's lecture, you will be crystal clear that what all incomes are taxable in India and what all incomes are not taxable in India. So this also will be taxable for what? Everyone. Now what is deemed in salaries chapter we will learn, not today. I'll just write here salary chapter, not today. But very important thing what we are gonna learn now is the fourth one. Very important. This discussion I'll do for 20 minutes. You might find this discussion little boring, but people, majority of the questions in exam come from this fourth point. So pay a lot of attention when I'm doing this fourth point. Concept is same, but little bit monotonous discussion will happen. So you might find it little boring, but it is what it is. People, I cannot dance and teach you. Whatever the concept is there, that is there. Fourth point is similar to second point. Any income deemed, any income what people deemed, see again government is what assuming, any income deemed to accrue or arise in India. Any income what deemed to accrue or what arise in India. Is that income actually accruing in India or arising in India? No. But government is what deeming or assuming it to accrue or arise in what India. It is also taxable for what everyone. See, first 4 points are similar, people. See, what is the first point? Any income received in India. Second point, any income accrued in India. Third and fourth point is same as first 2 points only. But here the government is what? Deemed. Any income deemed to received in India. Any income deemed to accrue or arise in India. This we are gonna learn. This is given in section number 9. This we are learning right now. They have given 8 incomes which will deem to accrue or arise in what? So we have to learn all those 8 points now. So are you ready, people? Yes, sir, we are ready. Now all these 4 income, before I start, all these 4 incomes are called as Indian income. All these 4 incomes are called as what? Indian income. So again, can you repeat with me, people? What are the Indian incomes? Any income received in India. Any income accrued in India. Deemed received in India. Any income deemed to accrue or arise in India. So these are the what? 4 incomes which are called as what? Indian income. And Indian income will be taxable for what? Everyone. Whether you are ROR, whether you are RNOR or whether you are NR. I said you people on the very first day of our lecture, on non-resident ho, yeah, whether you are RNOR or whether you are ROR, on Indian income you cannot escape. Even if you are on Mars, or even if you are on Jupiter, or even if you are on Moon, Indian income bloody government will collect what? Sorry, government will collect what, people? Tax. Now let us learn what is this section 9 talking about. People, 20 minutes, don't sleep, people. It will be little boring, but I'll try to make it interesting by giving you practical life example, how things used to happen. Some things might not be relevant, I'll say you, which is there in CA final, but I'll explain you just to make things interesting. See what has happened, no, people. I don't know what is there in final also. I don't know what is there in inter also. I know what happens in practical life, but I have to control myself. If I start teaching everything, no, people, half of the people will leave the class and go, because income tax is huge, and many people who have joined late the class, from day before yesterday I've got some at least 100 to 200 messages. Sir, when is the new income tax bill applicable to us? I'll make it clear to everyone, people. The new, first of all, many people has confusion. What is the confusion? Sir, 5 days back, they told us that the income tax bill is withdrawn. And now they are saying that the income tax bill is what? Passed. See what happened. On February 2025, the new income tax bill was introduced in the Lok Sabha, that is Parliament, it was introduced. And as soon as the bill was introduced in the Lok Sabha in February 25, the bill was transferred, or the bill was sent to a committee called as Select Committee for the recommendation. See what is Select Committee? Select Committee is basically a members committee in which ruling party members also will be there, as well as opposition members also will be there. Now what this standing committee will do? The standing committee will see the bill. if there is any changes to be made in the bill, or if there is any mistake in the bill, or if they want to change something, or if they want to give any recommendation, all the recommendation will be sent back to the finance ministry. And then finance ministry, if they want, they'll take the recommendation. If they want, they'll not take the recommendation. So what happened? The bill was introduced when, people? February 25, the bill was what? Introduced. This is only general knowledge, people, so that you don't keep on asking me doubts. February 25, the bill was what? Introduced. Then the bill was given to whom, people? Transferred to whom? Select committee. Select committee is basically members committee in which both ruling party and opposition party will be there. Then select committee sent its recommendation. Sent its what, people? A recommendation. To whom? Finance ministry. It sent its recommendation. Then what did the finance ministry? Mostly in the last week of July, I think. If I'm not clear on the date, but last week of July, the bill, the recommendation of the select committee was given to finance ministry. Then finance ministry, almost all the recommendations, there was some 500 recommendation, 400 to 500 recommendation. All the recommendations were accepted by the finance ministry. Somewhere in this section, this has to be changed, this section, this has to be changed, like this. So what did finance ministry did? Since there was lots and lots of changes, the finance ministry told that now it will create confusion. So what did finance ministry did? Whatever was the bill introduced in February 25, that bill was withdrawn. In August 9, on August 9 or August 8, I'm not sure, on August 9 or August 8, the old bill was what? Withdrawn, saying that a new bill will be presented within 2 days. New bill basically was whatever was the bill introduced in February plus the recommendation of the what? Select committee. So the new bill had come on what? August 11. And August 11, the new bill was introduced, and the new bill got passed in the what? Lok Sabha. As of now, it's not passed in Rajya Sabha, but it will be passed in Rajya Sabha, but it's not big deal. So, and then it will become an act. So this, if I will show you, see how does it look. So if you go, 1 second, I'll show you. This is for general knowledge, so that you people should be aware. Huh? No, I don't think so. 1 second, let us see. Till yesterday, nothing had happened. I don't know today, because I have not watched news till now. Jaldi karo bhai. What happened? So this is not my website, people. This is Sansad website. This is how Lok Sabha is. See, here is the list of members who all are there. Can you see committees, people, here? Committees, can you see here? There are different kinds of committee you can see here. This committee, that committee. Now can you see standing committee here? So here there will be various standing committees and all details will be given here. Now if you come to businesses, now can you see bills here? Now we'll click on bills. Now can you see here, people? The income tax bill number 2. Number 2 matlab number 1 had come on February itself. But after the recommendations of the select committee, it incorporated all the recommendation and the new income tax bill was introduced. Here. It's also passed here. In Lok Sabha, it was passed on what? 11th August 2025, it was passed in what? Lok Sabha. Then on 12th August, it got passed in what? See here. It got passed in what? See, date passed in Rajya Sabha. So when it is passed in Rajya Sabha, people, yesterday it was also passed. Now we are only waiting for what, people? President's signature, and then official gazette notification will come. So this is how your income tax bill. So can you see? As introduced in Lok Sabha, bill number, income tax number 2. So from now onwards, no, people, in the new income tax bill, we will not say any sections. We will be saying clauses. There is no section concept here. Clause 1, clause 2, clause 3, clause 4 will be there. You don't have to worry, people. This will be applicable from May 2027 exam. So if any one of your friends ask, say the May 2027 exams. And in reality, it will be applicable from financial year 26-27. That is from 1st April 2026. It will be applicable from real life. So now don't keep on asking me question. What I'll do, I'll take a clip of this and put it in Instagram so that people can see. think good content we have got. Chalo. If you want to see this bill, people, you can come to the Sansad website. In Sansad website, everything you will get. Now come back, people. Come back to what? Section number 9. We were doing this, but from yesterday I got lots and lots of messages, people. So I had to say this. Section number 9. What we were discussing in section number 9? Income. Incomes deemed to accrue or arise in India. Incomes what, people? Deemed to accrue or arise in what? India. That fourth point we are discussing now. There are 4 points, if you remember. The fourth point we are discussing now. Like this, there are 8 incomes which the government has given. Out of that, the first income. Any income from a business, any income from a business connection in India. Now people, at inter level only half of this point is there. Other half is there in final CA. But I'll try to explain you everything and then I'll say you what is there at inter level. Okay? First I'll only explain what is there for inter, then I'll give you extra knowledge of final also. So that is actually more interesting. Any income from what? Business connection in what? India. Now let us understand what is this point talking about. Now let us say there was a US company. Chalo. There was a US company called as ABC Inc. This is a what, people? What? This is a US company. US company matlab it does not have place of effective management in India. It's properly a non-resident. However, not however, one second. First give me the data of this. The total turnover of this US company in the financial year 25-26, the total turnover was, let us say, 100 crore. Was the total turnover of this US company. And the profit was, let us say, for easy calculation, we'll keep it as 10 crore. 100 crore was the turnover of the company and 10 crore was the profit of the US company. Nothing. It's registered in US, doing business in US. Nothing related to India. However, it had one dependent agent in India. It had a what in India, people? It had a dependent agent in India, and this dependent agent, US company is not there in India. It has no place of business in India. It does not have any store in India. It does not have any warehouse in India. It does not have anything in India. However, it has a what, people? Dependent agent who is working for this company in India. And during the year, whatever 100 crore turnover was achieved, out of that turnover, 20 crore turnover was from India. Out of the total 100 crore turnover, people, 20 crore turnover was from what, people? India. Now say me, people, should Indian government collect any tax on this? If the answer is yes, can you put in the chat box and say me on what profit or how much profit shall be taxable in India? Can you calculate and say me how much profit will become taxable in India? Hey, don't say 20 crore is no profit only. Arey baba, profit. Hey, government don't collect tax on turnover. Government collects tax on what? Profit. Turnover means sales. No, turnover ke upar government will not collect tax. Only if there is a profit on that, they'll government. Simple, people. Cross multiplication. How much? 2 crore. Or directly apply 10% on 20 crores. So this 2 crore profit will become what? Taxable in India. So government is saying this. On this section 9 will become applicable. On this what will become, people? Section 9. That this 2 crore will be deemed to accrue or arise in what? India. Sir, what, sir? This is common sense, sir. What was the need to what, sir? Deem. It is by default what? Indian accrual only. But people, what this US company to say, no? that where are we doing business? US. And what this agent used to sell, no people, that customers should directly send money to US account only. So what this US company used to say, we are receiving money in US. We are doing business also in US, but Indian government saying out of this 10 crore profit, 2 crore was from India. Only because of Indian source, you got this what people? Income. So government saying we cannot tax your entire 10 crore, but at least on Indian profit or Indian source of profit we will tax. But they were not agreeing. Who was not agreeing? This US company. So government had to introduce this section number 9, saying that whether you agree or whether you don't agree, we are putting it in the law only, that this income will deem to accrue or arise in what? Till here is there in inter-level. Now when you come to final, no people, you will learn something called as of social media. You know people, meta means what? It social media application like Facebook, WhatsApp, Instagram. Hey, Instagram people, you know Instagram? La 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 li 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 la, la 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 li 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 la. Hey, you know, yeah. Now can I say all those social media applications which we are using, who is owning that social media application? Meta. Now Meta is an Indian company. Hey, yes or yes? Meta is an Indian company, everyone. Hey, what? Yes. Is Meta an Indian company or a foreign company? Foreign company, US company. But people, are they earning any profits from Facebook, Instagram and WhatsApp? Tell me yes or no. Is Meta earning any profit from all the social media applications? Sir, yes. But do they collect money from you? Have you ever paid any money to use Instagram, Facebook or WhatsApp? Sir, no sir, we have never paid any money, sir. Yes, advertising, sir. But why will anyone pay money to Meta to do advertising? Because people like us are using the platform, so that someone will put advertisement on those platforms so that we see it and we get FOMO. I also want it book now. Yes or yes? So that's how Meta is earning. Let us say people, if today or right now we stop using social media application, we stop using WhatsApp, we stop using Instagram, we stop using Facebook, will anyone do advertisement there? No, because there is no public. Only when there is public, then only someone will put advertisement. So ultimately, can I say whatever advertisement income Meta is earning from India, it is from because of Indian customer base. But what Meta used to give argument now? Meta used to say, where are we registered? US. So our income is accruing where? US. Our servers are also located in US. And whatever advertisement company is giving money to us, it is giving money to us in what? US bank account. So where is the income accrued? US. Where is the money received? US. Government of India said, come here. Come here. Why are you getting advertisement income from India? Because Indian customers are using it. If Indian customers would not have used it, would you get any advertisement income from India? No. But they used to not agree. They say, no, your law is saying what? Income accrued in India. Is it accrued? No. Is it received in India? No. Then why should we pay tax in India? Government saying amendment in the law. Government saying it is because of a what? Business connection in India. So when you come to final CA, that time you will learn one provision. Now what is the government saying? Whatever incomes comes from advertisement in India, and if that advertisement income is related to the IP addresses located in India. So how much ever IP addresses are located in India, because our phones are connected to what? Linked to IP address. So because of that you are deriving that income. So that income is derived from a what? Business connection in India. So to that extent, see, we cannot say that Meta's worldwide profit will become taxable in. That I am not saying. Only to the extent of Indian customer base, that will become taxable in what? But at inter you don't have this much and all. People, there are many more points, but inter level only this much is there. Yes. Now one good question I got. Sir, Meta will pay tax in India, but for US they are residents, sir. Don't you think US government will also collect tax on that profit? And the answer is yes. US government will also collect tax on Meta's entire profit, and Indian government will also collect tax on Indian profit. So don't you think that it is resulting into double taxation, sir? Yes. So when you come to final CNO people, you will learn something called as DTAA. That is called as double taxation avoidance agreement. Again, what did I say? Double taxation what? Avoidance agreement. What happens if you are liable to pay tax in two countries? The country of which you are a resident, that country will give you the credit of the taxes paid in the other country. Now what will happen in Meta's case? Whatever tax it has paid to India or to Indian government on India's profit, on that much tax US government will give the benefit to what? Meta. But this is not there at Inter. You will learn all this in what? Final CA, double taxation avoidance agreement. Every country, almost India has double taxation avoidance agreement with almost every country. You would have seen no people when two prime minister meets, they sign various agreements, treaties and all. Out of that, one thing is called as what? Double taxation avoidance agreement. So all this final. In Inter, we don't have this much. Clear? Now I'll give you an example. Try to solve it. Yes, people, this is the example. Say me, how much profit will become taxable in India? This one. This example. Say me, out of 3 crore profit, how much profit will become taxable in India? Yes, everyone, I got only 2-3 answers till now. Yes, and the answer is what? 75 lakhs. See, XYZ Inc. is a foreign company, non-resident, and all the business operations are carried outside India. Turnover was 60 crore and the net profit was what? 3 crore. Out of 60 crore turnover, 15 crore is through Mr. A, who is a dependent agent in what? India. So can I say 15 crore turnover is from India? So how much will be my Indian profit? 75 lakhs. So on 75 lakhs, that US company will have to pay taxes in what? 75 lakh is the income. On that we'll have to calculate the tax. You know the tax rate for foreign company? People forgot? Some people are behaving like the Tare Zameen Par guy. What was his name? Ishan Nandkishore. Dekho ine ye. Yes, 35 percentage. Hey, you remember? This is the first entry in where people? Section 9. Any income deemed to accrue or arise in what? Now second and third point are similar, people, and which is very logical also. Second point. Any income from property, plant or source in India. Any income from property, plant or a what? Source in India. Now here how people used to manipulate government. See here. Such nonsense people were there. See here. What is to happen? Let us say there is one person called as Mr. A. He was an Indian, but he was a non-resident. He was not staying in India, like my brother. Mr. B. He was also an Indian, but he was a non-resident. NRI. Both are NRIs. Now what does Mr. A know? Mr. A had a property in, let us say, Delhi. Mr. A had a property in Delhi. So what did Mr. A did? No. Mr. A gave this property on rent to rent of property at the Delhi. So Mr. A gave the property to Mr. B on rent. Right? And where was the property located, people? Delhi. Now, what this Mr. A used to do and what this Mr. B used to do here, very smart they used to play with the government. These both people used to enter into a rent agreement. Rent agreement. And let us say the rent agreement is entered in US. And then Mr. A used to say to Mr. B, Mr. B, you do one thing, you pay the rent in my US bank account. So where is the rent received? US bank account. Now it's an income of Mr. A. Now what is Mr. A used to say to government? Government, where is the agreement done, government? Government is, Mr. Sir, agreement is done in US. So where is the income accrued? US. And where is the income received? US. Wow, I am a non-resident. So this is a foreign income. Now people say me, is it a foreign income? I want an answer. Should this income of rent be taxable in India or not taxable in India? You say me, according to you, should this rental income be taxable in India or not? Everyone is saying, sir, taxable. Why? Sir, where is the property located? Property is located in India. Since the property is located in India, people, don't you think the rental income from this property located in Delhi, India, don't you think this rental income should be taxable in India? And the answer is yes. So government saying this and all, we don't know. You might make rent agreement in Mars also, on Moon also, we don't care. You might receive in US bank account, Nigeria bank account or UK bank account. Where is the property located, people? Delhi. It is India. So on this income, what will be applicable, people? Section number 9. That this income will deem to accrue or arise in what? India. And on this income also you will have to pay taxes in what? India. These all are logical points only. People used to misuse the law. So government had to put a section itself. Now what will you do? We are deeming only. Go. Now do whatever you want. Now you cannot do anything. Actually, was there any need to introduce deeming fiction here? No. But people used to not listen only. Now section only they have put it. Now do fraud. Now there is a section only. So that is our what? Second point. What is the second point, people? Any income from what? Property, asset or plant or source in India. Same example I have given. Is this clear to everyone? Clear, right? Hey, are you understanding or not? Say me. Yes. Third point. Third point is cut, copy, paste of the second point. See here, what is the third point saying? Third point. Any income from sale of capital asset in India. Any income from sale of capital asset in India. Now here also see, same example I will give you. Mr. A is a non-resident. Mr. B is a non-resident. Now Mr. A is selling land and building at Bangalore to Mr. B. So what these people used to do? They used to enter an agreement in, let us say this time, UK. And they used to receive the amount also where, people? UK. Like this fraud they used to do. For mentioning this and all, we don't know. Where is the bloody property located? Bangalore. That is what? India. So on this income also, what will be applicable, people? Section number 9. So this income also will deem to accrue or arise in India and it will be taxable for everyone. Another example can be sale of shares of Indian company. Sale of shares of what? Indian company. Wherever you sell it. If they are shares of a what, people? Indian company, whatever profit comes on that sale of shares, on that also section 9 will be applicable. That is, that income also will become taxable in what? India. That is our third point. Any income from what? Sale of capital assets situated in what? India. On that also section 9 that will become taxable for everyone. See, this section was brought in order to remove any dispute only. Whether you want or not want, this income will be taxable in India. You have to pay taxes in India. Then Fourth point. Fourth point. Salary paid. Salary paid for services rendered in India. Salary paid for services rendered in what people? India. Now let us take an example of a foreign company. Let us take an example of Tesla. Tesla, everyone knows Tesla is a what? Foreign company. Now Tesla wants to start a business in India. But no foreign company will start in business in India then the next day. First they will send one person to India to do research about Indian market. That how is the Indian market, what is the customer behavior of India, how is the infrastructure of India, how is the electricity connectivity, or how is the road connectivity, or what is the purchasing power of the Indian customer, or what kind of cars will go on in the Indian roads. All this, first of all, they will do a what? R&D, research and what? Development. So what did this Tesla did? Tesla has sent one of its employee, Mr. let us say Chusk. Chusk is what? Employee of Tesla. Chusk is also a non-resident. He is employee of Tesla only. But now Tesla is sending him to where people? To India to do research about the Indian market. So this Mr. Chusk came to India and he started doing research about Indian market. And accordingly, he stayed in India for, I'll keep it in days, he stayed in India for 60 days. In India, he stayed for how many days, people? 60 days he had stayed in India. Now, first of all, say me, who will pay salary to Mr. Chusk? Can I say Tesla will pay salary to Mr. Chusk? Yes. And where was the employment agreement done between Tesla and Chusk? The employment agreement was done where? US. Employment agreement was done in US. And where will Tesla pay salary to Mr. Chusk? In his, can I say, US bank account. So the employment agreement between Tesla and Mr. Chusk was done in US. And even salary of Mr. Chusk is received in what? US bank account. But don't you think, even though the salary is accrued outside India, and even though the salary is paid outside India, but don't you think, people, for this 60 days, the services were rendered in India? So government of India says, whatever is the salary equivalent to 60 days, government is not saying entire year's salary. Whatever is the salary equivalent to what, people? 60 days, on this salary, what will be applicable, people, on this salary? Section number 9 will become what? Applicable. That is, on this salary for 60 days, Mr. Chusk, see, it's an income of Chusk because it's an expense of Tesla. Who is receiving salary? Mr. Chusk. On this 60 days salary, Mr. Chusk will have to pay taxes to Indian government. Is this clear to everyone? So whatever is the salary paid for services rendered in what? India. On this salary, it will become taxable in what? India. For many people say, sir, this is sir, but this is incorrect, sir. Don't you think, sir, we are demotivating people to come to India? Don't worry, there is one more chapter called as non-taxable income chapter. In that chapter, we will learn up to 90 days. Up to what, people? 90 days government is given as the benefit. That up to 90 days, the the salary will not be taxable in India. This I gave you example of 60 days, but when I start non-taxable income chapter, in that up to 90 days, that is 3 months benefit the government. If more than 3 months you stay in India, then boss, sorry, pay taxes in what? India. Am I clear? Yes. Then what these people do? They say another employee to India. See, for every, there is a proverb, no people English, where there is a will, there is a what? Way. And when there is a law, there is a loophole. Yes. But now what happened? The interesting thing here is not done yet. The interesting thing here is this Mr. Chusk. He stayed in India for how many days, people? 60 days to do research about Indian market. But now Chusk got too much respect in India. He was not expecting that much respect. He got lot of respect. So now, since he started getting lot of respect in India, he wanted to explore India more. So 60 days to he worked. He called his boss. Boss, I'll stay for more 10 days. I'll stay for what, people? More 10 days to explore India or to explore incredible India. I want to see Taj Mahal. You know, foreigners are very mad behind Taj Mahal. I want to see Taj Mahal. I want to explore this. I want to explore. So I will rest 10 days in India. I will rest for what? 10 days in India. Boss tell okay. No problem. Majja madi. So for how many days is there in India, people? 70 days. Is there in India for what? 70 days. And his boss is saying, I'll pay you salary for entire 70 days. He will not deduct salary. Because every employee in a year get n number of leaves. So he is getting salary for 70 days. But the $1 million question here is, how much days salary will become taxable in India? 60 days salary or 70 days salary? Please give the answers in the chat box. Oh my God. Some people are saying 60 days, some people are saying 70 days. And the right answer is entire 70 days salary will become taxable in what? India. Including any rest period in India. Sir, this is so unfair, sir. For 10 days, so he did not render only services in India. For 10 days, he was what? Relaxing and exploring what? Incredible India. Hey, nonsense. If government puts like this, no, what these people will do, no. Hey, we worked only for 10 days. For 60 days, we were what? Relaxing. Like this, people can start misusing the law. So government is saying, whether you are working or whether you are relaxing, if you have come on work visa, see, if you have come on tourist visa, then government will not have any problem. If you are come on work visa, whether you relax, whether you work, whether you go to spa, we are not concerned. Whatever services are there, on that entire salary will become taxable in what? India. I hope I have made myself very clear here. So that is the fourth point. Any salary paid for services rendered in India, including the what? Rest period in India. Same example I have given. Clear? Yes. So how many points we have learned till now, people? We have learned, people, how many points? First of all, what are we discussing? We are discussing what? Section 9, that is income deemed to accrue or arise in India. In that, the first point was for people, any income from business connection in India. Second was any income from what? Property, plant or a source in India. Third point was what, people? Any income from sale of capital asset in India. And fourth point was what? Salary paid for services rendered in India, including any rest period in what? India. Fifth point. Salary paid by Government of India. Salary paid by Government of India to Indian citizen. To Indian citizen for rendering services outside India. What is this point saying? My God. Salary paid by what? Government of India to Indian citizen for what people? For rendering services outside India. Why will government pay any salary for rendering services outside India? Can you give me one example of these people? Yes, online. Can you give me any example of this, that Indian government is paying salary to any citizen of India for rendering services out? Yes, Indian embassy. Can I say in other countries there will be Indian embassy? In India there will be no Indian embassy. In India there will be other countries embassy. Like in India there will be US embassy, UK embassy, or European Union embassy. Like this, in US there will be Indian embassy. In UK there will be Indian embassy. So in Indian embassy, who will work people? Indian citizen. They are called as ambassador of India. And how to become that diplomat or ambassador? How to become? For that you have to clear an exam called as UPSC. Once you clear exam of UPSC, there are various different things. One is called as IFS, Indian Foreign Service. One more is called as IAS, Indian Administrative Service. One is called as IPS, Indian Police Service. One more is called as IRS, Indian Revenue Service, like your Income Tax Commissioner, GST Commissioner, all those comes from IRS. So like this, Indian Foreign Service, it's a very supreme position, people. If you know who is the Foreign Minister of India, people? Yes, Dr. S. J. Shankar. Once upon a time, people, he was also an Indian ambassador to US. He was the main person in Indian embassy in US. And if you don't know, Dr. J. Shankar is not an elected person. He might be the foreign minister. He is not an elected person. He did not fight election in his life. Like how Modi ji, Amit Shah, Rahul Gandhi, everyone fights election and then they go to Lok Sabha. Dr. J. Shankar has never fought election in his life. As I told, he is nominated in Rajya Sabha. Via Rajya Sabha, he became a foreign minister. If you know, before Narendra Modi ji, who was the Prime Minister of India? Can you say me? People, I want your answer. Before Narendra Modi ji, who was the Prime Minister of India, people? Dr. Manmohan Singh. I'll give you one fact today, people, if you don't know. Dr. Manmohan Singh never fought one election in his life. Sir, kya baat kar rahe ho? Sir, what are you trying? He was our Prime Minister for 10 years, agreed. But he has never fought election in his life. Modi ji fights election. But Dr. Manmohan Singh has never fought election. He was nominated in Rajya Sabha and via that he became a what? See, you have to become member of any one house. To become any minister, you have to become member of any one house. See, Lok Sabha, you have to be elected by public only. But in Rajya Sabha, you can be nominated by the state government. So that's how Dr. Manmohan Singh was nominated in Rajya Sabha member, and that's how he became what? Prime Minister. Another example, live example. Madam, you know Madam Nirmala Sitharaman, Madam, Finance Minister of India, current Finance Minister. She has also never fought elections in her life. She is also nominated. She is nominated from Karnataka itself. From Karnataka Rajya Sabha quota, she is being nominated to Rajya Sabha. Now she is a member of Parliament in Rajya Sabha. That's how she became what? Finance Minister of India. See, Dr. Manmohan Singh might not be the great Prime Minister, but remember, people, he was the best Finance Minister India has ever produced. Best Finance Minister, Doctor. He might not be the good Prime Minister, but Finance Minister, no. Only educated Finance Minister India has ever had. Only Dr. Manmohan Singh. The only educated and actually deserving Finance Minister. Today you see, no, people, you would have in your school in economics, you would have learned the concept of LPG. Not the gas which comes to your home, nonsense. Liberalization, privatization and what? Globalization. That was the mastermind of whom? Dr. Manmohan Singh. Yeah. Now come back. Since it is little boring topic, no, so I keep on putting in this between so that it becomes little interesting. So salary paid by government. So whenever government of India is paying, let us say, salary to Mr. or why Mr. is doctor. When he was the diplomat, now he is the foreign minister, Dr. Jaishankar. Who is Jaishankar? He is the diplomat. Diplomat in US. Of where people? Indian embassy. So can I say, but don't you think Jaishankar is an Indian citizen? Yes, he is an Indian citizen. But can I say, most of the time in the year, where will Mr. Jaishankar be sitting? In US. So can I say for India, so Mr. Jaishankar will become a what? Non-resident. And where is he rendering services? US. And where is the salary received by him? In US account. But government saying no. Whenever government of India is paying any salary to Indian citizen for working outside India, that salary will still become taxable in what? A same provision is there in that other country also. Whenever other country diplomats come to our country, we will also not tax them. So let us say in US embassy, US citizens will work in India. So Indian government will also not tax. It's a treaty signed by all the governments that your ambassador you tax, our ambassador we will tax. Win-win situation for both of them. So we also don't have problem. Okay, we are taxing our ambassador, you tax your ambassador. So it's a treaty signed by almost all the governments. So whoever is there in US consulate, so Indian government will not tax. Similarly, whoever is there is an Indian embassy abroad, US government will not tax it. Who will tax it? Indian government. That was our fifth point. Salary paid by what? Government of India to citizen of India for rendering what? Services outside India. Now, so this was the fifth point. Sixth point is very easy, people. Just one sentence. Dividend paid by an correct, no, it's a vowel, by an Indian company. So whenever Indian company is paying dividend, whether you are a ROR, whether you are RNO or whether you are a NR, it will be taxable for what? All. So whenever Indian company is paying dividend, it will be taxable for what? Everyone. Sixth point is done. Seventh point I cannot discuss today. Seventh point I'll discuss when I'm doing income from other sources chapter. As of now, we are keeping this point on hold. If you are writing the notes, write down this and then write a bracket that we will discuss this point in income from other sources chapter. So now there is only one point left, eighth point. But eighth point is very big. Before I start eighth point, let us revise all the points. Everyone. What is the first point, people? Any income from what? Business connection in India. Second point was any income from a property, plant, or you can also write asset or a source in India. Then third, any income from sale of capital asset in India. Fourth point, salary paid for services rendered in India, including what? Rest period. And fifth point is what? Salary paid by government of India to citizen of India for rendering services outside India. And the sixth point is dividend paid by foreign company. Sorry, dividend paid by Indian company. Seventh point, we are not discussing it right now. Now we are discussing what? Eighth point and the last point in this section 9 category. Very, 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 very interesting point. This point talks about three incomes. It talks about interest income. It talks about royalty income. And it talks about fees for technical services. Three incomes it talks about: interest income, royalty income, and fees for technical services. Let us first understand the meaning of these three income. Interest income means what, people? I have given you a loan and you are giving me what? Interest. So for me it's a what? Income. So interest income. I have given you loan, you are giving me what? Interest. So for me it is a what, people? Interest income. Now what do you mean by royalty income? Similar to commission. Okay, what else? Please answer, people in the box. Sir, is it taxable only if government of India paid salary to Indian citizen? Yes, correct. Only if government of India is paying salary to, only then it is taxable in India. Correct. Sir, publication paying author for books. Okay. I'll give you classic example of royalty, people. Many people though will be knowing. You would have seen Shark Tank. Shark Tank. Every time they say, no, we want this much percentage plus royalty till we recover our money. Now I'll give you a classic example which you'll never forget of what do you mean by royalty is the amount paid to the owner of certain rights to use the right. Wow, very good definition. See here. I'll give you an example of royalty. Very basic example. This is one of the case. Like this, there can be various cases. Let us say I am an author. Who am I? Author. I know how to write books. So I have written one book. But I don't know how to market that book. So what will I do? I'll approach a publisher. I'll approach a what? Publisher. And what will I do? I will give the rights of my book. I'll give the rights of my book to whom, people? Public. See, whenever you would have purchased a book on the start of the right now, this publication, that publication, and then we will also see the author name written by him. So normally author is different and publication is different. So what will happen? Author will say to publisher, hey, see, I have written the book. I know only that much. Now selling the book, printing the book, marketing the book, everything, collecting the money, everything you do. I should not have any tension. I have done big work. I have done is I have written the what? Book. Now what will publisher do? He will take the rights of the book. He will print the book. He will do advertisement of the book. He will go to various book houses or Amazon, wherever. He will do everything. He will do. Now, but there will be an agreement between the publisher and the author. That is that let us say the MRP of the book. Let us say the MRP of the book. Let us keep it as 1000 rupees. 1000 rupees is the MRP of the book. And now there is a royalty agreement between the publisher and the author. Let us say it is 10%. For example, it can be any percentage, not necessary it has to be 10. Any percentage it can be. Now, between the publisher and the author, there is a royalty agreement. That whenever publisher sells the book for what? 1000 rupees, this author will get, people, how much? 100. So whenever publisher sells the book for 1000, author will keep on getting what, people? 100. The author will keep on getting. So whatever 100 rupees the author is getting, this 100 rupees for the author will be called as what? Royalty income. Am I clear? Yes. So like this, royalty can be on any rights. I have given you rights of any. Let us say I know how to make COVID-19 vaccine. But you don't know how to make COVID-19 vaccine. So I have given you the formula to make COVID-19 vaccine. So I have given you the rights of making the COVID-19 vaccine. Now we have an agreement that whatever amount you sell the COVID-19 vaccine for, of that 20% I need. So whatever 20% I am getting, that is for me a what? Royalty. Is this clear to everyone? Yes. So what is interest income? What is royalty income? We have understood. Now third category of income is called as fees for technical service. Whatever fees you get for rendering any technical services can be anything, people. It can be managerial in nature or consultancy in nature. Any kind of technical service. And for that, if you are giving me a what? Fees. Let us say I am giving you managerial service or I am giving you some consultancy. For that you are giving me fees. So that is called as what? Fees for technical services. Now if you are receiving any interest, or if you are receiving any royalty, or if you are receiving any what? Fees for technical services, there are two things you have to say. You are receiving means someone is paying you. You are what? Receiving it means someone is what? Paying you. First we have to check who is paying you. Who is the payer? Who is what? Payer. Is the payer Government of India? Who is the payer? Is the payer Government of India? If the payer is Government of India, then section 9 will become applicable. What do I mean when I say section 9 will become applicable? Means this incomes will deem to accrue or arise in India. People, can government take loan? Can Government of India take loan? Yes or no? Can Government of India take loan? I want everyone's answers in the chat box. Yes. Can Government of India take any rights from someone? Yes. Can Government of India takes any services of technical in nature from someone? Yes. So whenever government is paying any interest, whenever government is paying any royalty, or whenever government is paying any fees, the other person who is receiving it, for him that income will become taxable in India. For him that income will become what? Taxable in India. A classic example I'll give you. Very good examples I'll give you. See here. Let us say World Bank. You know World Bank, or we can also say IMF. This Pakistan keep on taking loan from this IMF. Now let us say Indian government, that is GOI, Government of India, has taken loan from what? IMF or World Bank. Now what will Government of India have to do now? Now Government of India will every year have to pay what? Interest to World Bank. Now World Bank, can I say World Bank is in India? World Bank is abroad. So can I say World Bank is what? Non-resident for India. Now for whom is this interest a income? For government is this income a interest a income, or for World Bank is this interest a income? For whom is this interest a income? Can I say it's an income for World Bank? Now the question arises, will this interest income be taxable for World Bank in India? The question arises, will this interest income be taxable for World Bank in India? I am asking you, what are you watching? Say me yes or no. And the answer is yes. So what the yes? Yes. Because who is paying them interest? Government of India. So whenever Government of India pays any interest, or whenever Government of India pays any royalty, or whenever I'll give you one example of royalty also. You'll understand more clearly. We'll go for COVID-19 vaccine only. Let us say there is a foreign company. Okay? It has given rights. It has given rights of COVID-19 vaccine. COVID-19 vaccine to Government of India, on the condition that how much ever Government of India makes, of that a certain percentage will go back to foreign company as what? Royalty. So now Government of India has started manufacturing the COVID-19 vaccine, and based on that it is paying royalty to the foreign company. It is paying royalty to the what? Foreign company. Now the question arises, whatever foreign company is receiving royalty, will that royalty income be taxable in India? Yes or no? Yes or no? And the answer is yes. Because who is paying them the royalty? Government of India. So we have to be very careful that whenever Government of India is paying any what? Interest, royalty or fees for technical services, then that income will become taxable in what? Am I clear? However, if the sir in that case, so no one will give loan to India. In that case, no one will give rights only to India. Don't worry, people. There is something called as double taxation avoidance agreement. That country will give the benefit of the taxes paid in India. And in reality, what happens when you come to final CA? There is one section as per old law called as section 90. For a person who is a non-resident, he has to follow Income Tax Act or double taxation avoidance act, whichever is beneficial to him. That we'll learn in final CA. So sometimes what happens, no people, DTAA, that is double taxation avoidance agreement, says that no, this income will not be taxable. But the Income Tax Act says this income will be taxable. So as a non-resident, it's an option that whichever is beneficial, you can follow that. That and all we'll learn in final CA. See, final CA, I told you, the paper is divided into two halves. 70 marks domestic law, 30 marks international law. So international taxation law also we will learn in final C. Interlevel as of now assume that this income should become taxable in what? India. See, why am I saying you this? Because some people thoughts will be coming in their mind. Sir, this is unfair, this is unfair. I know it's unfair. But there are some other things in real life also. See, they cannot teach you everything, no people. There are not only income tax, no, there are 6 papers, there are 8 to 9 subjects. So they have to, already the syllabus is very fast. That too for 50 marks. Then you will start abusing the dash. However, if payer is someone else, like you and me, we are not government of India. If anyone else is paying interest income, royalty income or what? Fees for technical services. In that case, check purpose. Check purpose of using money for interest, rights for royalty and services for fees. Check the purpose of using money, rights or services. If the purpose is in India, then in that case, section 9 will become applicable. But if the purpose is outside India, then section 9 will not become applicable. People say me one thing, before I explain this concept, why was there no two bifurcation here? Purpose is in India or purpose is outside India. Why is there only two bifurcation here? When government of India was paying, directly section 9 was applicable. But if someone else is paying, why are there two bifurcation? Why is there no two bifurcation here? Can you answer me that query? Aman, I'll explain you 1 second. Let me clear the concept. Then if there is any doubt, I'll explain that concept again. First, my question is, why is there no two bifurcation here? Why is there only two bifurcation here? Here also they could have done no government of India, purpose in India or purpose outside India. Now, well, because government of India will use the money or will use the rights or will use the services for purpose in India only. Why? Because it is what? Government of India. If government is taking loan, where will they use the loan? India. If government is taking rights, where will they use the rights? India. If government is taking any services, where will they use the services? India. That is the reason there are what? No two bifurcation here. If government of India is paying, then directly these three incomes will become what? Taxable in India. But if someone else is paying, then we have to check the purpose. If the purpose is in India, then accrued in India. If the purpose is outside India, then not accrued in India. Sir, can you give an example? Definitely. Here, let us say there is Mr. A. He is a non-resident. He has given a loan to Mr. B. Mr. B is a resident of India. Now Mr. B will have to do what, people? Will have to do what? Will have to pay interest to Mr. A. Mr. A is a non-resident of India. Now for whom is this interest and income, people? This is the income of what? Mr. A. Now $1 million question, people. Whatever income Mr. A is deriving, will that income be taxable in India? Whatever income Mr. A is deriving, will that income be taxable in India? Say me, yes or no? Sir, it depends. Sir, depends on what? If Mr. B, because who has the money? Mr. B has the, if Mr. B is using the money in India, if Mr. B is using the money in India, then for Mr. A, this income will become taxable in India. But if Mr. B is not using the money in India, then for Mr. A, this income will not be taxable in what? So it depends on how is the other person using it. How is the what? Other person using it. If the other person is using it in India, because money is with Mr. B, no, he has taken the loan, then taxable in India. If he is using outside India, then not taxable in India. Another example. Let us say a foreign company, non-resident, has given rights to a Indian company, not Indian company, let us say Indian company only, is the resident of India. Now this Indian company is paying royalty to foreign company. Now the question arises, will this royalty income of foreign company be taxable in India? Depends. If Indian company is using the rights in India, means it is, let us say COVID-19, it is using the rights and manufacturing COVID-19 vaccine in India and selling it in India, then for this foreign company this income will become taxable in India. But if it is not using it in India, then accordingly foreign company's income also will not be taxable in what? Clear to everyone? Even if the transaction is between two non-residents, let us say two non-resident, one non-resident has given loan to another non-resident, and now let us keep his name as A and let us keep his name as B. Now B is paying interest to A. Both are non-resident, both are nothing, they have nothing to do with India. However, being a non-resident also, if he is using the loan in India, can I say if he is using the loan in India, means something is related to India, something is related to Indian resources. Otherwise, why will someone use money in India? Means he has to do something in India. Then in that case, his income will become taxable in India. His income, only the interest income I am talking about. But if he is not using the loan in India, then his income will not be taxable in what? Is this clear to everyone, people? So what is the summary we had learned, people, here? The summary we had learned here is that there are three types of income. One is called as what? Interest income. One is called as royalty income, and one is called as what? Fees for technical services. If these three incomes are paid by government of India, then it is taxable. But if it is paid by someone else other than government, then we have to check the purpose. If the purpose is in India, section 9 will become applicable. But if the purpose is outside India, then section 9 will not become what? Applicable. Examples, whatever I have given, I have written here. There is one exception, but I will not discuss that exception right now because too much has gone into us. Now whatever doubt you have, you can ask me the doubt. Sir, if Mr. B receives principal amount in India, the principal amount, Mr. B, if Mr. B receives principal, see, principal amount is never an income, people. It's a loan, it's a liability. You will have to repay the liability. Only the interest is an income. See, Mr. B will pay two things to Mr. A. One, he will pay the principal amount and one is the interest amount. Principal amount is only his amount which is getting back. Only the interest is an add-on. Only that is the income, not the principal. Yes. Someone else had a doubt. Aman, you also had a doubt. What is the doubt, Aman? Anyone else? Please message me on the main chat, people. So then Mr. A will not give loan to Mr. A if Mr. B uses the money in India. No, sir. See, there is one exception given when the transaction is between two non-residents. There is one exception given. Balance in all the other case, people, that income will become taxable in India. Because that money is used in India, people. When the money is used in India, no, people, Indian government say you are using our resources, you will have to pay tax to us. Or otherwise take loan from India. Simple. For two non-resident, one exception is there that we learn in some time. Yes, any other doubts? No doubts? Well, then let us revise section 9 once. What was section 9 saying? Incomes deemed to accrue or arise in India. First point, everyone please revise with me. Everyone, you have to speak. First, income from any business connection in India. Second was what, people? Any income from what? Property, plant or a source in India. Then any income from what? Sale of capital asset in India. Fourth point, any salary paid for services rendered in India including rest period. Then fifth point, salary paid by government of India to citizen of India for rendering services outside India. Then sixth point was what? Dividend paid by Indian company. Seventh we did not discuss. Then eighth point was interest income, royalty income, fees for technical services. If paid by government of India, taxable. If not paid by government, check the purpose. Where is the purpose? If the purpose is in India, then accrued in India. If purpose is outside India, then not accrued in India. So with this, what have we learned, people? First of all, what are we learning? We are learning what? Scope of total income. In that scope of total income, what did we learn? Any income accrued in India, any income received in India, deemed received, or any income deemed to accrue or arise in India will become taxable for what? All. So by now we know what are the incomes which are deemed to accrue or arise in what? After this, I'm gonna start something called as foreign income. Just relax for 2-3 minutes, people, because too much has gone in your head right now. Relax for 2-3 minutes and then we will start with something called as foreign income. And plus now we will learn that why in modified basic condition, you know, modified basic condition, that 60 days, 120 days, then there was another concept called as deemed resident, why they are directly called as RNOR, that we are gonna learn now. So relax for 2-3 minutes, then we will start. Yes, if you have any doubts, people, you can ask me now. Any doubts till now? I hope you are understanding, people. यस, ये उनको एक बार बोलना स्टॉप करने को. चलो, let us start. I'll just on the recording both ways. Now, let us start, people. So, before going on the break, people, we had learned 4 kinds of Indian income. That is, any income received in India, any income accrued in India, deemed to receive in India, or any income deemed to accrue or arise in India will be taxable for what? Everyone. Whether you are ROR, whether you are RNOR, or whether you are NR. It will be taxable for what? All. Now, people, very next 15 minutes are very important. Once you understand this concept, no people, cut things will go. Very important concepts for the next 15 minutes, and that concept I'll merge it, that why in modified basic condition number 2 and in deemed residents, why are such residents directly called as RNOR, and why was RNOR concept also introduced in the first place, that also you will understand. So please pay a lot of attention. Now, 5th point. Business or profession income. Business or profession income accrued and received outside India. What did I say? Business or profession income accrued and received outside India. Matlab, the business is also outside India and the income of that business is also what? Outside India. Let us say I have a business in Dubai. So where is the income of Dubai business accrued? Outside India. And the income of that business is also received what? Outside India. However, but control is in India. But control is in what, people? Control is in India. So here the government says, if you are ROR, it will be taxable. If you are RNOR, it will be taxable. But if you are NR, it will not be taxable. Now, let us understand why. To understand why, we will first have to also write down the 6th point. 6th point says, business or profession income. Business or profession income accrued and received outside India. Business or profession income accrued and received outside India, and control is also outside India. Control is also outside India. Then it will be taxable only for ROR. It will not be taxable for RNOR and NR. Now, let us understand what are this point number 5 and what is this point number 6. Point number 5 says if you are doing any business or any profession and that income of that business or profession is accrued or and received outside India, but if the control is in India, then in that case, if your ROR and RNOR, it will be taxable. But if you are a NR, it will not be taxable. Now let us understand it why. Now let us take an example of a profession. You remember of my example of Mr. S from Dubai. Mr. S is very famous in Dubai, I told you. You remember? He has two categories of income, Indian income and foreign income. Basically big celebrities, big sports person, I said you. Now what these people used to do? Can I say Mr. S is a very big celebrity in India? He is into a profession. So where is his profession setup? Where is his main profession setup? India. But don't you think these people will have Indian income also? From profession in India, they'll have Indian income also. 40 lakhs Indian income. But can I say they will also go to abroad and there also they'll do a show? Let us say I am Mr. S. Where is my main profession setup? My main profession setup is in India. But I'll go to foreign also to do some show. Or to do some show I'll go. So I did a show in Dubai. Or I did shows multiple places I did a show. So I'll get money from that. So where is that show income of abroad accrued? Outside India. And I also have a bank account outside India. So that shows money also I am receiving in Dubai. So the income was accrued in Dubai because the show was done in Dubai. And income of that show is also received in Dubai bank account. So income is accrued outside India. Income is also received outside India. This can be one example. Another example is my main profession is in India. However, I have a restaurant in Dubai. I have one what? Restaurant in Dubai. I have a hotel in Dubai. Or I have some business in Dubai. So where is that business going on? Dubai. See, I am taking example of Dubai. It can be any country. It can be UK also, US also, any of the European countries. Any country. I have a business outside India. So where is that income of the business accrued? Outside India. And also the income is also received in that country's bank account. So income is also accrued outside India and income is also received what? Outside India. However, when I come to India, some decisions of that business I take from India. Or I have a team in India which take care of the management of all the worldwide business. Can I say all these big celebrities, big businessmen, big sports person, don't you think they have multiple businesses spread across India as well as outside India? In India also they'll have very classic example of a sports person or a celebrities, they'll have multiple cafes or t-shirts or jerseys. They'll have sell in India also and sell outside India also. Now whatever they're selling outside India, it's a foreign income because that business income is accruing outside India and income is also received. But can I say the control is from what? India. So there can be two kinds of foreign income. One kind of foreign income is where the control is in India. Control is in where, people? India. And one more kind of foreign income can be there, people, when the control is what? Outside India. See, some celebrities can also have a business outside India where they are not controlling from India. Let us say in London I got very good business opportunity. So I become a 5% shareholder there. I am just a 5% shareholder there, people. I am not controlling it from India. So this income was, let us say, 30 lakhs and this income was, let us say, 15 lakhs. So what is my total income? 85 lakhs. So if I am a ROR, no, people, government saying for you to no benefit. Hey, you, ROR means people like you and me. Government saying come here, ROR, you are normally found in India. You have Indian income also, you have foreign income, both control in India as well as what? You are normally found in, what are you doing? It will become taxable for what? On all incomes. If you are a what? ROR. See, for ROR, don't apply your mind. If you have one, don't even apply your mind, because for ROR all incomes are taxable. But government is saying, hey, RNOR, you come here. Indian income to everyone will have to pay tax. But RNOR will also have to pay tax on that foreign income. RNOR will also have to pay tax on that foreign income which is getting what? Controlled from which is what? Controlled from what? So RNOR basically those people who sometimes they are in India and sometimes they are what? Outside India. Like 50% of the time they are in India and 50% of the time they are what? Outside India. So government saying, you people, you have foreign business, but where is the business income controlled from? Yeah. Hey, can I say celebrities will have managers? So where will that control be done of the entire? From India only. If it is not getting controlled from India, let us say I have just 2% invested outside India, then government saying no problem. You only have to pay tax on that foreign income which is getting what? Controlled from India. But if you are a non-resident, then government can only tax your what? Government cannot tax your foreign income, whether it is controlled from India or whether it is not controlled from India. That is the reason, people. Now if you go to modified basic condition 2, do you remember modified basic condition 2, people? Do you remember modified basic condition 2? First of all, if you remember, we had discussed 3 cases wherein basic condition number 2 was not applicable. In that, if you remember, we had learned this third point, that if you are an Indian citizen or a person of Indian origin who is staying outside India but coming to India for a visit, and if your Indian income is what? More than 15 lakhs, then what is applicable to you? Modified basic condition. That is, in place of 60 days, what will be replaced? 120 days. And because of this 120 days condition, if you become a resident, you will directly be called as what? RNOR. Now let us say, if Mr. S stays in India for 120 days or more, if Mr. S stays in India for what? 120 days or more, then he'll have to pay tax on Indian income, so no one can escape. Also, he'll have to pay tax on that Indian foreign income of which is getting controlled from what? Government is saying, now you are staying in India for a considerable number of time, means that business or profession which is getting controlled from India, that also will become taxable in India. If you don't want this income to be taxed in India, then please stay in India only for what? 109. But let us say some celebrity does not have any foreign income, or if he does not have this foreign income, control in India wala foreign income he does not have, he has only control outside India, he does not have this category of foreign income, he does not have, then he does not have to worry. Then he can stay in India for 181 days. Why 181 days? Because 182 or more he will become a resident. But if he is having any foreign income which is what? Getting what? Control from India, which most of the celebrities will have or businessmen will have, then they have to manage their stay in such a way that only they stay in India for what? 119. Because once they stay for 120 days or more, then they'll become a what? RNO. Similarly, in case of deemed resident, if you remember deemed resident, that if you are an Indian citizen whose Indian income is more than 15 lakhs and you are not liable to pay tax in any country, then directly you will become what? RNOR. Means you will have to also pay tax on that Indian income, that foreign income which is getting controlled from what? See, they are not taxing that foreign income which is controlled outside, that they cannot tax. Let us say I am staying in Cayman Island. I am a citizen of India staying in Cayman Island, and I am having only income from Cayman Island, nothing to do with India, nothing control is done from India. So they will not tax that income. Even though I might be a deemed resident, but deemed residents are what? RNOR. But for RNOR, this income is not taxed only. The government had problem only when the income was getting what? Controlled from India. But say me now one thing. I have one doubt. Will you answer that doubt, people? My doubt here is, where did my doubt is in the 5th point. What is my doubt? Business or profession income accrued and received outside India, but the control is in what? India. It's taxable for ROR. It's taxable for RNOR. My question, $1,000,000 question in front of you which you will not get. Why for a non-resident this is not taxable? Don't you think even for non-resident it should have been taxable? Why? Because where is the control from? India. So logically it should have been taxable even for non-resident. Why it is not taxable for non-resident? Hey, I want answer. Think, just think. Whatever comes to your mind, answer. No income in India, Indian income. Hey, this is a foreign income, people. But control is in India. So my question is, don't you think it should be taxable for RNOR also? Sorry, NR also. It should be taxable for NR also. Why it is not taxable for NR? I'll say you the reason. Let us say I am Mr. John of UK. Then they will lose foreign exchange. Okay, you are little bit there, Jairam, because it's taxed in for. Don't come a foreign country. That's a separate ball game altogether. See, let us say I am Mr. John of UK. I am who, people? Mr. John of UK. I have a business in UK. I have a business in what? UK. But once I was going through Google, I was fond of traveling. Once I was going through Google, I found India is a very beautiful country. So I thought, let us visit India for 1 month. So I, Mr. John of US, booked the tickets of India and came to India for what? Visiting. For tourism purpose, I came to India. So 1 month I'll stay in India. I'll go South India, North India, East India, West India, Central, all the way I'll go. In between 1 month, I got 10 calls from my UK business. Mr. John, we have some problem with this. Mr. John, we have some problem. And I told, okay, you do this, you do this. So don't you think some control I have done from India? And if government would have kept taxable even for non-resident, don't you think they would have never come to India only? It's like, daddy, if we go to India, whatever business decision we take, they'll tax that income also. Let's not go to India only. That is the reason what has the government told, that for non-resident it will not be taxable. Means they have given the benefit of 119 days or 181 days. That this much benefit is available to you. If you stay more than this, then you will come under what? RNOR category, or you will come to what? ROR category, depending upon the conditions. Depending upon the condition. So this much benefit the government themselves have given. Otherwise, people, it would have become difficult. Even for RNOR people, they can stay, if their Indian income is more than 15 lakhs, they can stay in India still now for 119 days. And if their Indian income is less than equal to 15 lakhs, then still they can stay in India for what? 100. This much benefit government has to give people. Otherwise, no one will come to India only. Many people have lot of investment in India, so they have to come to India to look after that investments. So this much relaxation the government has to give. If you stay more than this, sorry, then we will tax it. Am I clear? So now say, sir, from exam point of view, what you have to remember? Simple. Whenever in question, see, logic is fine. Now in exam we have to understand magic. Every time we cannot put logic in exam. What is the magic? If you are having any business or profession income which is accrued and received outside India, if the control is in India, taxable for ROR and RNOR, not taxable for NR. And if you are having any foreign income, that is business or profession income which is accrued and received also outside India, as well as the control is also outside India, then only taxable for what? ROR. This much only you have to remember for what? Exam point. Logic and all is fine. Now the last point. Point number 7. Point number 7. Any other income matlab any other income other than business or profession income. It can be salary income, it can be rental house property income, it can be capital gain income, it can be income from other source other than business or profession income. Any other income accrued and received outside India. Any other income accrued and received outside India, taxable only for ROR. not taxable for, hey, work. Why is it not working? What happened? Hey. And not taxable for what? NR. So now see people, from exam point of view, it's very easy to remember. See here, I'll just minimize it little bit. Hey, can you see everything? Can you see? On one page, can you see everything? Yeah? If you are ROR, if you are what? ROR, that is people like you and me, bloody, we have to pay tax. We have to pay tax on all income, whether it's a Indian income or whether it is a what? Foreign income. But if you are a non-resident, then you have to pay tax only on what? Indian income. But if you are RNOR, then you have to pay tax on Indian income plus that foreign business which is getting control from what? This was the only reason why RNOR concept was introduced. And that is the reason why in modified basic condition 2 and in deemed residents they are directly called as what? RNOR. They cannot be directly called as ROR. Why? If it is directly called as ROR, even that business income which is getting controlled outside India and all those other income which are done outside, that also would have become taxable. That much we cannot do. So again, if we are ROR, if we are what? ROR, we have to pay tax on Indian income also, foreign income also. But if we are non-resident NR, then we have to pay tax only on what? Indian income. But if we are RNOR, then Indian income plus that foreign business which is getting controlled from what? Is it easy to remember now? Now whatever question they ask, we have to follow all these steps. Don't jump anyone. Whenever they give anything in the question, first, is it income received in India? If yes, then taxable for everyone. Then go to the next step. If that is not the case, income accrued in India. If that is not the case, then go to income deemed to accrue in India. If no, then go to, is it foreign business, control in India, or control outside India, or is it any other income? Like this, you have to follow the steps. And cut, you will keep on getting the answer. Am I clear? Yes or yes? Let us see from our notes also once. Section 5. Scope of total income. Income received in India, income accrued in India, deemed received, deemed accrual, taxable for everyone. Then income from business or profession, accrued and received outside India, but control is in India, taxable for ROR and RNOR. And control outside India, taxable only for ROR. Then any other income earned and received outside India. 8th point is the remittance point. It's not the relevant here. But 8th point is, see here, income earned and received what? First let me give an example, then you will see here, I am Mr. A. Okay? In my first example, I am a ROR. I was having interest income from US bonds received in US bank account in the year 24-25. How much was the income? Let us say, converted to, we'll keep in dollars only, $10,000. $10,000. What is the question? I am Mr. A, I am a ROR, I have some interest income from my US bonds which I have received in US bank account. And amount was relevant to the year 24-25. How much was the amount? $10,000. I have multiple questions, but I'll ask you one by one. You have to keep on answering me. First question. Will this $10,000 be taxable in India? I want everyone's answer. Only 2-3 people are answering today. Is this $10,000 taxable in India? Yes, everyone is saying yes. And the answer is yes. Sir, why? Because sir, you are a ROR. Even though this income is accrued outside India, even though this income is received outside India, it will still be taxable in India, because who are you, sir? Sir, you are a ROR. Yes, everyone said yes. If the answer is yes, in which year it will be taxable? If the answer is yes, in which year it will be taxable? Don't say me assessment. This just give me the answer as previous year. Can I say it will be taxable in the previous year 24-25 itself? Because that is the year I have received the income. So it will be taxable in this year. The year I have received the income, that year only it will be taxable. Yes, assessment year is relevant is 25-26. Very good. So in the previous year 24-25 or assessment year 25-26, I paid tax on this. But now what happened in the next year? Hey, what happened? In the previous year 25-26, what happened? This money was there in my US bank account. So what did I do? I remitted the amount. I remitted the amount to my Indian bank account. I remitted my amount to Indian. This $10,000 I remitted to what? Indian, converted to INR, whatever might be the rate that day. I converted to INR in my Indian bank account. My question is, when I am doing remittance in the year 25-26, on remittance, will this $10,000 be again taxable? Sir, not taxable. Sir, why? Because sir, we have already paid tax, sir. In the year of receipt, we have already paid tax on $10,000. This is merely a what? That is the 8th point here. Income earned and received outside India for an earlier year, but remitted to India in the current year. Not tax. Because if you would have been ROR, then already you would have paid tax. But say me, if you are NR, then? If you are NR, then? If you are a non-resident, or whether you are a RNOR, then? Will it be taxable in 24-25? No. Will it be taxable in 25-26? No. Because for non-resident only, what is taxable? Indian income. And for RNOR, what is taxable? Indian income plus business of foreign which is country. Is this anything like this? This is any other income accrued and received outside India. So whether on received or remittance, nothing will become taxed. If you would have been ROR, then on receipt it would have been taxable, but on remittance it will not be what? Taxable. Is this clear to everyone? Same thing I have written here. No tax incidence arises at the time of remittance, as earlier it would have been taxed if you would have been ROR. Now solve this example, everyone. Mr. A is a what, people? ROR. During 22-23, it had interest income of what? $10,000 received and earned in US bank account. However, it was remitted to India in bank account in the year 23-24. In which year it will be taxed? In which year it will be taxed? Everyone, I am waiting for your answer. In which year will it be taxed? Will it be taxed in the year 22-23 or will it be taxed in the year 23-24? Say me PY answer. I know AY is there, PY answer. And the right answer is what? 22-23. Mr. A will pay tax on $10,000 in the PY 22-23 on due basis. Again, it will not pay tax in the year 23-24 on remittance basis. Is this clear to everyone? With this, almost 90-95% of this chapter is done. But there are 2-3 more points here and there which we have to discuss, but before that, we'll do one question. So please come to page number 25. Everyone on page number 25. I'll give you time to solve it, but first listen how to solve this question. Everyone on page number 25. Already the textbook is uploaded in the Google Drive. If you have not got the hard copy, which you will get hard copy. If you are from Bangalore, book is available at the branch. If you are from Chennai, Hyderabad, Coimbatore or any other city, if there is no branch near to you, please call the contact details given to you. They will courier to you. If there is a branch near to you, then what you do is call the branch. If the book is available, go and collect the book. Otherwise, call them and ask them to courier you. I think all books you would have got except for DT, there was a problem. Okay. Page number 25, question number 7. Following are the particulars of taxable income of Mr. R for the previous year ended on 31st March 2026. Now, if you come to the end of the question, what are they saying? Find out the total income of Mr. R if he is a resident and ordinary resident, if he is a resident but not ordinary resident, but, and third is if he is a, so what you have to do is, first we'll make one something called as particulars. Then we'll see if he is a ROR, will it be taxable? If he is RNOR, will it be taxable? And if he is NR, will it be taxable? Like first one, I'll do it for you. Then I'll give you time to solve. See, what is the first one here? Royalty received from Government of India. Now, how to solve it? Don't directly jump to the conclusion. Is this income received in India? I want the answer in the chat box. Is this income received in India? I want, yes, sir. Where is it written it's received in India? I too cannot see. Is something else printed in your textbook? Nonsense. They have only told royalty from government. Have they told royalty was received in India? No. So we cannot say anything. Is this royalty accrued in India? Might be. But is it covered by deemed accrual? Yes. Any royalty paid by Government of India will be taxable for what? All. Because it's deemed to accrue in India, so it will become taxable for what? All. So we will write here what? 24K. So please solve like this for at least 5, 6 or an entire 9 you can do, entire do. I'll give you 2 to 3 minutes of time, then we'll write the answer together in the note. Solve how much ever you can. Go ahead and solve how much ever you can. Those who don't have the textbook, I have kept the question on the screen. From point number 2 it's visible. When the time is given to solve, please solve, people. See, going right or going wrong is secondary. Primary is to try. See, why do I give time in class to solve? So that the fear of trying something new is taken away from you. How much ever questions we solve in class, people, something new only will come in exam. So this is the technique that whenever new thing is asked in the exam, you don't have that fear that how will we solve it. And this can be removed only via practice. So don't sit like a movie theater here and eat a popcorn. Please try to solve it. 1 second. Yes. Now, if you are able to done, how much ever you have done, very good people. Now come to your notes people. Let us do the balance part and write the entire answer people. Everyone in your notes people will write the answer together. Everyone in your notes people, please. Now, I'll take the answer in the last. Everyone in your notes will write the answer together people, please. Everyone in your notes. Write down. Question number, what is the question number? Question number 7. Page number 25. Please write down everyone with me. Don't waste the time. Please write down. Write down. Computation of total income. Computation of total income of Mr. R for previous year 25-26 or assessment year 26-27. Computation of total income of Mr. R for previous year 25-26 or assessment year 26-27. Make 3 columns, first one being the very big column of particulars, then 3 columns for ROR, RNOR and NR. Please write down people. Now, what is the first entry we see here? Royalty. Royalty what? Royalty received from Government of India. What is the amount? 24,000. Taxable for what? Everyone. So write 24,000 in all the 3 columns. Write down. Next. Point 2. Point number 2. What is the point number 2 you see? Income from business in Afghanistan. 25,000, of which 15,000 was received in what? India. Control is from what? Afghanistan. So where is the business going on? Afghanistan. Matlab the business income would have accrued in Afghanistan. Is there any income received in India? Yes. So can I say any income received in India will be taxable for everyone? We will only, out of 25,000, let's focus only for 15,000 right now. So write down. Income from business. Income from business in Afghanistan. And where is the control? Okay, we'll write that. Before that, first, out of that, how much is received in India? How much is received in India? So can I say 15,000 though will become taxable for everyone? What was the total income? 25,000. So if out of 25,000, 15,000 is received in India, how much is received outside India? Received outside India. And where was the control? Can I say control also was in Afghanistan? That means, second point, business income is earned outside India. Income is also received outside India and control is also outside India. So the balance 10,000 will be taxable only for whom, people? Then I said it will be taxable only for ROR. Dash and dash. If the control would have been in India, then ROR and RNOR. Then write the third point. What is the third point? Third point is what? Interest received from G, a non-resident, against a loan provided to him to run a business in what? India. Again, follow the step. Is it income received in India? No, sir, we don't know. Nothing is given. Is it income accrued in India? Might be. Is it deemed accrual? Yes. Why? Because it's an interest income. And that interest income, and where is the loan utilized? The loan is utilized for the purpose in what? India. That means section 9 is applicable. That means that income is deemed to accrue in India. Means taxable for what? All. Interest received from G. Purpose is where? India. So what is the amount? Taxable for A. What is the amount? 5,000. Taxable for all. Then fourth one. What is the fourth one saying? Royalty received in India. Royalty received in India. Royalty received in India. I am not stuck. There only they have given. Royalty is this income received in India? Done. Taxable for all. Don't even read the first. See, further things will confuse. See here. Royalty received in India from S, a resident, for technical services provided to run a business outside. Now here people. So the purpose is outside India. So what? Where is the income received? One thing should be in India. Is one thing in India? Taxable for everyone. This was a trick thing. Royalty received in India. How much? 20,000. 20,000. And 20,000. Then point number 5. Point number 5. What is point number 5 talking about? Income from business in income from business in Jaipur. Income from business in Jaipur. Is that income received in India? Where is it written? Nonsense. They have not written anything. But is it income accrued in India? Yes. Why? Because the business was in Jaipur. If you know, Jaipur is in India. Thank God you know. The business is controlled from France. Nothing does not matter. Here is the income accrued in India. Khatam. Here only done and dusted. Income from. If you have any doubt, people, please let me know if you are not understanding any adjustment. Income from business in Jaipur. Estu? Yavalu. 40,000. Correct? No, Telugu. What do you say? Yanta, correct. Yanta, 40,000. Income from business in Jaipur, 40,000. Then, sixth one. Sixth one is what? Profit on sale of shares in Indian company received in Germany. Germany. Is it income received in India? No, income is received in what? Germany. Is it income accrued in India? Yes. Even if you say no, it will be covered by what? Deemed accrual, because the shares are of what? Indian company. So it's a deemed accrual or accrual, taxable for what? All. Yes or yes? Yes, sir. So write down profit on sale of shares of Indian company. How much is that? 15,000. 15,000. 15,000. Next is what? Seventh one. Dividend from Japanese company received in Japan. Is it income received in India? No, it's received in Japan. Is it income accrued in India? No, it's accrued in Japan. So it's not deemed accrual also. Is there any business or profession income which I am doing? No. So it will be covered by the last category. That is what? Any other income accrued and received outside India. Taxable only for dividend. In that, write two things. From Japanese company received in Japan. How much? 10,000. तेलुगु में क्या बोलते? पदी 10,000. Correct. Sorry. Only language I got too excited. Sorry. Only for what? ROR. Only for ROR. Then next one more, there is dividend. Dividend is from what? RP Limited, a Indian company. Taxable for what? All. From Indian company. And how much is the amount? 5,000. 5,000 and 5,000. Then eighth one. What is eighth one talking about? Income from property in London. Now 1 second, everyone stop writing. Yes, you also stop writing. 1 second, stop writing. Income from property in London, deposited in a bank in London, later on remitted to India, 1 lakh. Now, is this income received in India? It's received in London. Is this income accrued in India? No, it's accrued in London. Is it any deemed accrual? No. Is there any business or profession income? So no. But this is what? Any other income received and accrued outside India, taxable only for what? ROR. Now here there can be two assumptions. Assumption number one, if you assume that this is last year's income and we have only remitted this in the current year, then it will not be taxable for anyone, because last year only we would have paid tax. But if we assume that it was this year's income only and this year only we have remitted it, so in that case it will be taxable only for what? ROR. So here they have not told anything that this is previous year's income remitted to India in the current year. If they would have used the word that this is previous year's income remitted to India in the current year, then only we can assume that it is previous year's income. In the absence of anything written as last year or previous, we are assuming that this is current year income only and we have remitted in the what? Current year. Am I clear? So since it is any other income accrued and received outside India, taxable only for what? ROR. Income from London property. Income from London property and received in London. How much? 1 lakh. Taxable only for what? ROR. Then point number 9. I'll write it in the next page. First copy down till here everyone fast. Sir, are we supposed to write a working note for this assumption? No, no need to write. I just told you that what students can think. If same income remitted in India in next year, then next year again it will not be taxable. Once only it will be taxable. In the year of earning it, not in the year of remittance. Yes, can I scroll the screen? Can I scroll the screen? Yes, point number 9. What is point number 9 talking about? Income from business in Canada controlled from Mumbai, 50,000 of which 27,000 is received in what? India. Is any income received in India? Yes. So let's focus only on that. Out of 50, 27 is received in India. Let's focus only on that. So income from business in what? Canada. Out of which, sir, what if you assume this as previous? But they have not written in the question. No, it's a previous year income. I'll show you like this multiple question today only. In homework, I'll show you that wherever they want to ask this question, no, they write down that this is previous year's income. I'll show you. Received in India. So out of that, how much is received in India, people? 27,000 is received in India. So if it is received in India, it will be taxable for what? All. So if 27,000 out of 50,000 is received in India, so can you say me how much is received outside India? 23. And where is the control from? Oh, so it's a income accrued outside India, received outside India, but the control is in India, taxable for ROR and RNOR, but not taxable for what? NR. That's all. There is no 10th adjustment. So please use your calculators. I said, people, this paper is a theory and practical combo. To solve practical questions, you have to learn theory. Like this only questions will come in exam. But to solve this, you need to know theory. Hey, what the tax you are understanding? Total karo. Please total it. Oh, some one people has left the class. Very good. 8:30 only is left. Class is till 9. Nonsense. First day, I think you're having 2 lectures, no? It's too hectic, sir. First the law, now DT. Too much. 2,94,000. Please, even online, you don't sit like a movie hall. You also answer. Not even one answer I'm getting from online of calculation. Please calculate. You can also unmute yourself and speak with me if there is no disturbance around you. 2 lakh? Okay. 2,51,000. Wrong, huh? Please help me with the calculation. It's 1,74,000 people in the online are saying. Okay. It's 1,74,000. Third case, what is the answer? 1,51,000. Please cross check the answers. I don't know the total. Total, I have not done it. It's on the students. So please cross check it. I hope this is the final answer. Yes. 2,94,000. See, if you are ROR, see on what income you have to pay tax. If you are ROR, RNOR, then little less. Then if you are NR, then little less. Basically, ROR, global income. NR, only Indian income. And RNOR, Indian income plus that foreign business which is getting control from India. What is 1,84,000? Someone is getting 1,84,000. Correct? No? What I have written on the screen is correct? Okay. Okay, no problem, Guru. Chalo. Now what I'll do is, no people, this is only one question there in classwork. Like this, 25 questions are there in homework sums. I am not going to do anything. I am going to do 2-3 questions. Orally we'll do it now. Balance the other 20 questions. Please do it. Either tonight or tomorrow morning. Or whenever you get time. Answers are also printed there and there. Please do it. All the homework sums are very important, people. I say it again and again. If you have doubt, then let me know. So let me show you 2-3 homework sums. Balance you have to do it. I want everyone's participation here when I am doing homework sum. Otherwise, I will not do it. You don't write any answer the way I am writing, because you will have to revise it. Answers are already there in the solution part. So you don't write marking, because when you revise it, if marking is already there, then you will not be able to revise properly. Page number. Yes. 1 second. Now everyone on page number 462, people. Everyone on page number. See how you should answer me in the chat box. If your answer is all, write answer as A or write answer as all. A or all will do it. If your answer is only ROR, then write ROR. And if your answer is RNOR and ROR, then write the both answers. If it is all, just write A or just write all. I'll understand it. Everyone ready? Let us start with some Dumtanana people. Page number 462. Following are the incomes of R, a citizen of India, for the previous year 25-26. Interest on savings bank deposit in Corporation Bank, Delhi. Yes, answer. And the answer is what? All. You don't write anything. The answer is already there in the solution part. So why? Because it is received in India? No, we don't know. But is it accrued in India? Yes, because the bank account is in what? India. Then income from agriculture in Africa invested in Russia. Income from agriculture in Africa invested in what? Russia. Is it income received in India? Is it income accrued in India? Is it any deemed accrual? Is there any business or profession income? No. So this is what? Any other income accrued and received outside India. Taxable only for what? ROR. So agricultural income only from India is not taxable. Agriculture income from other country. When I do agriculture income chapter, that time I'll say you that only income tax only exempt agricultural income from India, not from other countries. Next, third one. Read the third one. Dividend received in US from an English company, out of which 2,000 is remitted to India and total income is 12,000. Yes, I want the answers in the box. Is it income received in India? No, it's remitted does not matter. Is received is in USA and dividend is of what? Foreign company. So income is received outside India, accrued outside India. Is it any deemed accrual? No. Dividend is a foreign company. Any business or profession? No. So any other income accrued and received outside India will be taxable only for what? ROR. Entire 12,000. Clear? Yes. If you have doubt, then please put the doubts in the box. Salary drawn for 2 months for working in Indian Embassy office in Australia and salary received there. Is it income received in India? No. Is it income accrued in India? No. But is it covered by deemed accrual? Yes. Salary paid by Government of India. So taxable for what? All. Now what is standard deduction? We'll learn in salaries chapter, not as of now. Then next. Income from house property computed. What is computed? Tomorrow we are starting with the fresh chapter called as income from house property. That time we will see the word computed. The building is situated in Iraq, out of which 20,000 was deposited in a bank in Iraq and the balance was remitted to India. Yes, what is the answer? What is the answer? People are saying only ROR. Is it income received in India? No. The income is received in Iraq only. Remitted does not matter. Where was the income received? Iraq. And where is the property situated? Iraq. The income accrued in Iraq, received in Iraq. Only remitted does not matter. So it is any other income received and accrued outside India, taxable only for what? ROR. Clear? Not 5,000. Oh, hello. Entire 25,000 will become taxable for ROR. Not only 5,000. Entire 25,000. Only 5,000 is remitted to India does not matter. Once it is taxable, entire 25,000 will become taxable. Not only 5,000. Mukesh, I hope you are understanding. Then, pension received in Belgium for services rendered in India with a limited company. Is it income received in India? No, it's received in Belgium. Is it income accrued in India? Yes. Why? Because it is from a services rendered in what? India. So taxable for what? All. Clear? Now in every, see all the balance questions you are required to do, okay? I will not do it. I'll just show you 1, 2, 3 more adjustment which I think is little tricky. Do adjustment number 5. Do adjustment number 5 in question number 6. Do adjustment number 5. Profits from a business in Kenya controlled from India but received in England. Can I say ROR and RNOR? Clear? Do 8th point. 8th point do. Income from former employer in India. Pension from former employer in India received in Vatican City. Is it income received in India? No. Income is received in what? Vatican City. Is it income accrued in India? Yes. Why? Because it is from the boss in India. The pension you get after retirement means you would have rendered the services in India till the time you are into service. Now once you got retired, that boss in India is giving you pension. So it's because of the services rendered in India you are getting pension. So that is income accrued in India, taxable for what? All. For because pension you get after retirement only. So it's use the word as former. Now do the point number 11. Just forget the word untaxed for time being. Yes, essay. You had a doubt, no? Essay. Here. Just ignore the word untaxed for time being. I'll say you what is it. You don't scratch it. Past profits of a UK business of the year 15-16 brought into India 90,000. Will it be taxable in the India in the current year? No. Now why have they used the word untaxed? See, untaxed not means that we did not pay tax on purpose. Maybe that country don't have tax, or maybe that country on this income they don't collect tax, or they have some basic exemption limit in that country, or up to certain amount they are not liable to pay tax. So it does not mean that on purpose we did not pay tax. So whenever they use the word past, people, past is past. Ignore the past. Only focus on the current. Future, no. Current. Future, what do you know who will come? Focus on the current. I am talking about tax here. So here it will not be taxable for what? Anyone. Do question number 7. In that, do point number D. Do point number D in question number 7. Balance all the adjustment, you have to do it. Again, I am repeating it. Now you are getting, with every passing question, you are getting the flow, people. Is the flow setting it now? So for practice, we have kept, so see, every sum we cannot do in class. Otherwise, syllabus will not get over. So practice, you have to do. Concepts, I have made it clear. Whatever doubt, you can message me. Rent from a property in France, deposited in a bank in France, and later on remitted to India through approved channel. Is income received in India? No, it might be remitted to India, but where is the income received? It's received in France. And where is the property located? France. So this is again what? Any other income accrued and received outside India, taxable only for what? ROR. Mark this as important. Question number 8, this last but one adjustment. Very good adjustment this is. See, I always say, students, whenever you feel any question as tricky, or whenever you feel any question as important, or whenever in a question you feel any adjustment as important, and mark there and keep. Because one day before exam or for your second revision, you will not be able to solve everything. So mark it and keep today only. 1-2 marking I will give. Balance you have to do it on your self-analysis. See, for some people question number 1 is tricky. For some people question number 2 is tricky. So you do your self-analysis and mark it. So when you do second revision, no, that time you will only have to do filtered out questions. This will save the time. Okay. Read it and give me the answer. Hey, no, matlab not taxable only is saying. Some people are saying ROR, some people are saying ROR and RNOR. Many people are not responding only. They have gone into shock. Sir, what the what? Let us read now. That's the reason. Tricky I am doing. Rather than answering everyone messages, one I'll only do it. Tricky. Rent from a property in Nepal, deposited by a tenant in a foreign branch of a Bank of India operating there. One thing is clear, that the income is accrued outside India, because the property is located in what? Nepal. So the income is accrued outside India. One thing is very clear. Now the question here, the main question is, sir, where is the income received? Is the income received in India or is the income received outside India? And the right answer is, income is received outside India. Income is received outside India. Sir, what? It's an Indian bank. So what? Where is the bank located? In Nepal only. Hey, SBI is there in Nepal also, SBI is there in UK also, and SBI is there in US. That doesn't mean that whatever amount you receive in SBI is always in India. Where is the bank located? Where is the bank located? Bank is located in Nepal only here. It's a branch of Indian bank. But where is the branch located? Nepal. So income is accrued outside India and received also outside India, taxable only for what? ROR. Sir, if instead of foreign it is native, then all. Native matlab, if they would have told in Indian branch. In Indian branch of Bank of India, if that would have been the question, then all. Because in that case, income is received in India. Clear, everyone? Balance, you do it, people. Write down this here in question number 12, to be done after TDS chapter. To be done after TDS chapter. If you have not got textbook, at least write somewhere and keep page number 466. To be done after TDS chapter. And question number 13, right? To be done after salaries chapter. To be done after salaries chapter. Because if I give you now, you'll do, then you'll not get the answer. You'll be feeling demotivated. So it's better I make you say now only. That's all. Balance all you can try, people. There are some 20 questions, people. See, all the answers are there only. So you can do it. Now there are two small things which are left in this chapter. One thing I think I can cover today. Tomorrow morning, but tomorrow whenever is the class, I think 6 o'clock. First 20 minutes will complete this chapter. Then we will start with the new chapter called as income from house property. One small concept which is there, which we'll cover right now, is this comes in MCQs normally, people. If you are a non-resident, no people, these 4 points are specifically for non-residents. If you are a non, these points are not for ROR, these points are not there for RNOR. This point is specifically for what? Non-resident. For non-resident, no people, this 4 income, even if they are earning it from India, government don't want to collect tax. What did I say? This 4 income, even if you are what? Earning from India, government don't want to collect tax if you are a what? Non-resident. So for a non-resident, following shall not be deemed to accrue or arise in what? India. First, purchase of goods in India by a non-resident for export purpose. If a non-resident is coming to India, buying some goods from India and selling it outside India, then it is not taxed. Why? Hey, if I purchase and if I export, for me it is taxable. But this is for non-resident. Why? Why like this? No income is there. Why? He's exporting, no? So he'll export for free or he'll make some profit out of it. He'll make some profit out of it. 100% there will be income. Sorry? To encourage exports, yes. Yes. See, why does government wants to encourage exports? See, in India, no people, we are mad behind foreign exchange. Why we are mad behind foreign exchange, people? Because in India, imports are high and exports are less. See, whenever you're importing something, you have to pay in dollars. See, world base currency is dollar. So whenever you're importing something, no people, you have to make payment in dollars. But to make payment in dollars, you need to have dollars. Can I say, can RBI print dollars? So we'll have to have some dollars. Now there are 2 ways of getting dollars. Either we export and get dollars, or either we'll have to take loan from abroad to make the payment in what? Dollars. So government is saying that in order to match our import payments, do export so that we get dollars and we can make payments for our import. So government, in the coming lectures also, people will see wherever foreign exchange is involved, now government is mad. They're saying we don't want to collect tax. Whenever your GST will also start, in GST also you will learn that whenever you're exporting something, on export there is no GST also. Plus there is one chapter in income tax called as non-taxable income. You get lots of benefit if you are exporting. For the first 5 years they don't even collect income tax also. So lots of benefits are given in order to do what? Exports. So if a non-resident is coming to India and doing exports, any profit is not taxable in India. Second, collection of news in India by a non-resident for transmission outside India. Like foreign newspaper, news channel coming to India for reporting. Whenever a foreign newspaper or a foreign reporting or reporter or foreign news channel is coming to India and doing reporting from India and sell and broadcasting it and earning money, not taxable. Why? Why? Hey, this point is not applicable to Indian media. If let us say today Aaj Tak is earning some profit, hey, for them it is taxable. This point is only for foreign media. Why like this? Why this benefit is only given to foreign media? I want your answer. I want your answer. I cannot teach one way. I need your answer. Whatever comes to your mind. You would have seen that 2 years back, we had something called as G20 summit in our country. So when G20 summit had happened, lot of foreign media came to India to report about India. See, this is in order to promote that you foreign media come to India, report what is happening in India, so that it will be broadcasted worldwide. So many people will come to know about India, and this will indirectly improve our economy. Many people will try to invest in India. Many people will try to come to India. So this will indirectly benefit us. Am I clear? So foreign newspaper, foreign news channel who comes to India for reporting, for them it is not taxable, not our Indian media. Then third, shooting of cinematograph films in India by a non-resident. Again, if a non-resident is shooting any movie in India and making any profit out of it, it's not taxable. You would have seen many non-residents comes to India, make some music album in India or make some shooting in India and go, not taxable. Again, why? Promote. You come to India, shoot movie in India, shoot songs in India, you earn profits. We will not tax it. Why? Again, it will be displayed worldwide. Many, which country is this show good? Oh, India. Let's go to India. Tourism. People with tourism, no people, we can earn a lot of profits. Can I say the day tourists enter in our country, till the day he leaves our country, we will keep on earning from him. Because once he lands to India, he'll book a taxi or auto, money. Then he'll book a hotel. Then food he'll eat. Then he'll explore various places. Then he'll buy some souvenirs. He'll go to various places, various amusement park, museums, that, this, hotel, restaurant, XYZ. He'll do some shopping mall, etc., etc. He'll buy handicrafts, that, this. He'll use taxi, local transport, this. So can I say everywhere we can what? Collect money from him. That too not Indian money. Foreign exchange. In India, you'll have to exchange, but ultimately we got dollars, no? Hello? Yes. So again, in order to if T series or SHAH films is shooting any movie, do they have to pay tax? Yeah, yes. For them, no benefit. Anyhow, they're running into losses. Sorry. They'll have to pay tax. Am I clear? Yes. And the last point is, if you're earning any income from display of uncut diamond, you first of all say me, people in India, which city is called as Diamond City? Yes, people online. Which city is called as Diamond City? Surat. Yes, Surat is called the Diamond City of India. People in Surat, no people, there is one big park specifically dedicated to what? Diamond. If I can show you, Surat, here I got it. See here. See what is written here, people? The Surat Diamond Bourse is the world's largest diamond trading hub located in Surat and aims to enhance the diamond trade by providing a modern and efficient trading environment. One second, if I can open their page. क्या हुआ? हाँ, धीरे धीरे आएगा, धीरे धीरे it will grow. But see, where did it go? I want to show you something here. See here. How much square feet, people? 67 lakh square feet. 15 floors. How many merchant offices are there? 4,700. Plus there is a space of many more. This is not even half full yet. And if I have one point I wanted to show here. Now here what happens, no people? Not finding it. Here what happens, no people? Here entire world's trader comes with their respective regions diamond and they display here. You know something called as uncut diamond? Can you give me one example of uncut diamond? You would have heard of something called as polki. Girls in the house. Polki, you would have heard polki. Polki is one form of diamond. It's called as uncut diamond, not basically processed. And Polki is one kind of uncut diamond. So like this, people from all over the world, large number of traders comes to this Surat diamond to display their uncut diamond and sell and make a profit out of it. So government wants to create a hub in India of the foreign market, that India, Surat should be known as a diamond city of not only India, of the what? World. So with this, what will happen? We will have a very good control over the diamond market. So government wants to promote, come to India, come to India. So ultimately, this is also another way to increase foreign exchange, another way to promote India at a larger scale, at a world scale. So this is the benefit given to what? Display of uncut diamond. See, again, these benefits are only given to what? Non-resident. See, we are to in India only. Where will we go? If the other country wants to call us, they'll give us benefit. So these are the 4 points. What are the 4 points? Again, these are only for non-residents. Again, I am saying purchase of goods for export purpose by a non-resident. Second, if you are having any foreign media or any newspaper of foreign coming to India for reporting. Third, any shooting of films by a non-resident, and any display of uncut diamonds by a non-resident. With this, people, these are the 4 points. There is one more point left, but now the time is not permitting me, that I'll take tomorrow. So for the first 10-15 minutes, we'll complete that point and then start with a new chapter called as what? Income from house property. Till then, people, have a very good night, and I hope you'll do some homework, some come for the tomorrow's lecture. Bye-bye.